Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate gibberish into something you can actually understand. Today we're cracking open a Schedule 14A filing from Compass Inc. Don't worry, it's not as boring as it sounds. Think of it as peeking into the company's game plan for the year with a few juicy details about who's running the show and how much they're getting paid. Let's dive in and see what we can find. First off, this filing is a proxy statement, basically a notice to shareholders about the upcoming annual meeting. They're laying out the proposals for a vote and giving everyone the lowdown on what's happening. Think of it as the company's version of a town hall, but with more paperwork. The main event, electing directors. These are the folks who oversee the company's strategy. They're recommending that shareholders re-elect 3 Class I directors, Robert Reffkin, Frank Martell, and Dawanna Williams. Dawanna Williams is standing for election for the first time. The filing tells us a bit about each nominee's background, skills, and why they should be on the board. Scroll, Frank Martell cast an Chief Executive Office role. For example, Frank Martell has over 30 years of executive experience in marketing and financial services, while Dawanna Williams has real estate expertise as a developer and corporate attorney. The board seems to value experience in both real estate and corporate leadership. Next, let's check the corporate governance section. This part highlights how Compass is run and its commitment to things like transparency, accountability, and diversity. It's like their corporate pledge. Some highlights they mention are having a diverse board. They have 4 directors from a diverse racial or ethnic group. The filing also says that the company performs annual self-evaluations and has policies against insider trading. These are all signs of a company trying to be responsible. Moving on, there's a table outlining the current board of directors. It lists each director's name, age, how long they've been on the board, and which committees they serve on. It's a quick snapshot of who's who in Compass's leadership. All directors are independent except the CEO. Now we get to a crucial section, the Audit Committee report. This committee is responsible for overseeing the company's accounting practices and financial reporting. Basically, they make sure the numbers are legit. The committee has appointed PricewaterhouseCoopers, also known as PwC, as the independent public accounting firm for the coming year, and they are asking stockholders to ratify or approve this appointment. It's standard practice, but it's still an important check on the company's financial health. Here's where the money trail gets interesting. The filing details the fees paid to PwC for various services. In 2024, audit fees were about $2.5 million, but total fees including tax and other services were almost $3.6 million. That is a pretty significant jump from the prior year when total fees were about $3 million. Who owns the most stock? That's what this section is all about. It lists the major shareholders, including any individual or company that owns more than 5% of the company's stock. It also shows how much stock the directors and executives own. It is always important to keep an eye on this to understand who has control of the company. According to the filing, the Vanguard Group, SVF Excalibur, FMR LLC, and BlackRock are the major shareholders, each owning a significant chunk of Compass's Class A common stock. Robert Reffkin, the CEO, owns a lot of Class C common stock, which has a higher voting power. This means he has a lot of control over the company's decisions. Time for the say on pay vote. This is where shareholders get to give their opinion on how much the top executives are getting paid. The board recommends a vote for approving the 2024 executive officer compensation. However, it's non-binding, meaning the company doesn't have to follow the vote. The compensation discussion and analysis dives deeper into the company's philosophy behind executive pay. It's all about attracting, retaining, and motivating talented executives. This section outlines how the executive compensation program is designed to achieve these objectives. Before we hear about pay, the document talks about the performance. It notes a challenging year in real estate. One number that stands out to me is that the company had their first full year of positive adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, and free cash flow. This indicates the company's growth. Let's peek at what the company plans to pay. In 2024, CEO Robert Reffkin's total compensation was almost $15 million. The Chief Financial Officer, Kalani Relitz, made a little over $2 million, and the General Counsel, Bradley Serwin, made almost $1.2 million. It is a big bump in compensation from the prior years. What happens if the executives leave or there's a change in control. This section details the potential payouts they would receive. Mr. Refkin is eligible to receive the following enhanced severance payments and benefits in the event that his employment with us is subject to a qualifying termination. Within 3 months prior to or 12 months after a change in control, with cash severance topping almost $3 million and medical benefits of almost $70,000. That's a nice parachute. The CEO pay ratio is disclosed here. It shows the relationship between the CEO's pay and the median employee's pay. In 2024, the CEO's total compensation was about 151 times the compensation of the median employee, who earned $99,030. This number can be useful to evaluate fairness and equity within the company. Finally, there is a pay versus performance section that details how the company thinks their performance links to what the executives get paid. I'm always a bit skeptical of these because many companies, while within the rules, can show different sides. Okay, so now what are some of my overall thoughts looking at this report? For one, reading through the document, I think it's clear that Compass has been working hard to stabilize its finances. The company's focus on cutting costs and improving efficiency seems to be paying off. However, the document acknowledges risks. They have to be able to attract and retain agents and have to be careful about how they are running their operations. The rising litigation costs and changing laws could affect them in the future. That's all for today's corporate decoding of Compass's proxy statement. I hope this helped you make a more informed decision about your investment. Don't forget to like, subscribe, and leave a comment below with any other companies you want me to decode.